I'm just going to break down GJ and the next possible move we're expecting from GJ. That should be by the end of the call. All right, first of all, let me just scroll back a bit. I just want to show you guys one or two things about the market. You see, okay, now when the market is moving, it's targeting areas where we have what we call liquidity. Now, liquidity is just like money. Like, you know, these big institutions, they need to fill in their positions with your money because they have so much money, they can't just execute all their trades at once. So they need your money to fill in their positions. So that is why you see you enter off a trade, your analysis is okay, and all of a sudden what happens? The trade hits your stop loss and what starts going your direction. How many of you have experienced that? Can you just put a sign on the chat box? How many of you have experienced that? Like your analysis is all okay, and you just place your trade, and the next thing the trade goes to your stop loss, and immediately it hits your stop loss, it starts going your direction. That's what happens most times. And the same thing too, I've experienced it over and over, and I will be like, it seems as if my brokers are monitoring me or my village people or something. But sincerely, none has to do with either your village people or anything. It has to do with the institutions filling in their positions with your stop losses. Okay, so now the basic idea of trading smart money is to see where the institutions are placing their positions, are placing their buy and their sell orders. We want to take advantage of those positions. And remember, it takes time for them to distribute price. So most times you might not see your possible entry on smart money because you know how these hedge funds operate. They have so much large fund that they cannot actually fill in all their orders at the same time. So they take up to like 1 week, 2 weeks to distribute price. Okay, so now you have to wait to see a clear signal to tell you that, okay, this is what I want to do. You can't just jump into a trade because you are seeing one candle and you think it's FU candle or you think it's other blocks and all that. Because a lot of people make that mistakes. Not all engulfing candles are other blocks. Because once you start trading smart money, I'm telling you, you'll be seeing all candles. In fact, all candles are other blocks in the market. And believe me, once you start trading like that, you keep on, getting your stop loss being hit. So this is not all about engulfing candles. This is not all about FU, like the market must do a fake out and all that. It doesn't have to do with all that because most times before the market even gives you a fake out, it has to give you, equal distribution of price and all that, equal levels. But most of the times we have some ways we actually catch a snipe, like using imbalance, using other blocks in between break of structure and all that. Okay, I'm going to break down this chart. Okay, so now just follow me, okay? Follow me. All right. So let's start from this spring right here, because once you see this sharp, let's hold on. All right. Once you see this sharp movement, you see how price moves so fast. Are you seeing how price moves so fast? So we are going to talk about imbalance and a whole lot of other things too. You see how price move fast. Sell candle, sell candle, sell candle, sell candle. There were no buy candles. There were no buy positions. Like buy orders. This was the only buy order that was here on this time frame. Right. This was the last sell. This was the last buy. There was kind of an imbalance here. So when I mean imbalance, now price, both buy and sell has to correspond. Okay, the market has to balance itself, both buyers and sellers. So when the market moves in one direction, the market automatically corrects itself by filling up those positions, like filling up the imbalance. Okay, I'm not going to really go through imbalance that much on this call, but just let's start up. Okay, now first of all, now let's go through this again. Now you see this point here. Now this market moves up so fast. You see there's a little imbalance here. The market came back, filled it up. I see. Buy. There were no sell offers then. You filled it up. I see. You filled it up. Imbalance. Okay, moves up again. Okay. All right. So the next thing now is let's just start putting our lines. Oh, damn. Sorry. Let's start putting our lines now. Sorry, they just switched power. My screen is just messed up now. Sorry, just give me a minute. Okay. I was still saying, okay, now, first of all, imbalance. Let's use blue lines for our imbalance. Take notes. Remember, let's use blue lines for our imbalance. Blue lines for our imbalance. Blue lines for our imbalance. Remember, blue lines for imbalance. Okay, so whenever the market moves fast, all we have to do, we use a blue line and mark there. Okay, all right, so let's go. Next one, all right, market moves fast, down, okay, up, right here. You see this structure right here, okay? Structure right here, the last cell, no corresponding sell positions to fill up this place. We just had buy positions here. All right, so let's go again. Let's put it here. All right, filling in balance. So which means from this point, and also take note of something. When you're checking my charts, you also observe I like using whole numbers. That's how trade house works. How to trade. All right, so you can see whole numbers 0, 0, 0. That's what I like using. Right. Okay, now let's go. So remember, equal highs, equal lows, they are not your friends. Equal highs, equal lows, they are not your friends. Anywhere you see equal highs and equal lows, they are not your friends in any way. Okay, so understanding my chart, most times you see lines like this. This is how we trade. This is how we trade. The FX analyst group, this is how we trade. Basically, this is how we trade. We don't add any other thing. We want to see how the market is being manipulated. We want to see the best possible points where we can actually take our trades from without getting hit. Okay, so now remember something. Your equal lows are not your friends. And then whenever you see the E here, it means there's piles of money here. Whenever you see the X, it means that the market has taken out the lows. Okay, so that is just the basic symbols I use for my charts. You can see them among all smart money traders too. Okay, all right. So now let's just start going through. Sorry, oh God, who are these people? Sorry, sorry, I have to go on airplane mode. Okay, sorry about that. Okay. All right. Now let's go. Now you see there are some moves that you'll be asking yourself, why did this market move this way? Why did it go up? If it doesn't want to continue going up, why did it not come down? Are you seeing these equal levels here? Equal levels right here. We have equal levels here. Okay. You see how this market is gradually going down. Now, this market wants to come down. Okay. It wants to come down, but you see there are equal highs here. Are you seeing equal highs here? All right, now the retail trader mindset of trading, one market breaks off a structure, what happened, break and a retest, right? Right off here. Are you seeing that? Are you seeing that? Kind of trading style, like support, resistance, you put your stop loss here, right? This is what retail traders do. Okay, so now we see the E here. What happened after that? You see how they took price up above here. See, we've taken out these highs up. Bring it down. Yeah, this market is going your direction. You're seeing it. It has broken here. You test here. What happens? You send it up, take out your stop loss, then send it back down. Now, this also is also what? Equal lows too. So they can decide to be pushing this market up and down just to take out orders and all that. But remember, this is our blue line. Hope we haven't forgotten. When this market did a spring here, right off at this point, we had kind of an imbalance. Now, whenever the market moves like this, we always have some orders that are open at this point. Some orders, for some reasons, this market didn't come back to close up. So whenever I see an imbalance in line with another block, I'm certain that something is going to happen around that point. So you can see their main aim here. Their main aim is actually to push this market up. That is their main aim. But remember, if you want to push it high, they have to fill in their orders enough. And doing that, they have to take out the stop losses. So That is why they have to start creating equal highs and equal lows. Now you see equal lows, equal lows, equal lows. Now they've created equal lows. Now you can see all your candlestick pattern inside bar, bullish pin bar and all that. You start buying. Yes, you start buying probably maybe to the previous high, or maybe you want to swing it. Then what happens? The market starts going against you. Like you can barely hold a trade for a day without it coming against you. So it's frustrating because there are so many swing traders that might just set a trade and just leave it for it to be running. Now, you see how this market goes up, takes out the stop loss, starts coming down. That is not the main focus of this whole training. Now, watch out whenever I use this sign, this symbol, whenever I do something like this. Whenever I do something like this, it means break of structure, okay? Whenever I use this. So take note. I'm not going to be repeating this thing. When I put something like this, it means okay, this market has broken out of the structure right now. Okay, now, this is where the tutorial starts. Okay, all right, so now let's go. Now, when this market was, coming down, remember we had an imbalance here. If you have your charts marked up, you don't know what the market wants to do, but once you set the traps and the market starts going in your intended markups and all that, you should expect something to happen around those points. Okay, so I'm going to show you some entries, some badass entries right off here. All right, so now, okay. All right, so can you guys hear me, please? Can you guys hear me? Can you guys hear me? Can you guys hear me clearly? Because I want to start off the sniper entries now. We have to walk through these charts up and down. That's the purpose of this. Okay. All right. Okay. Now, there are two things I want to say. When market breaks below a particular structure, I want to watch out for two things. I want to watch out for an order block that sits inside the structure and an imbalance. Those are the two things. What do I mean by that? Okay. Now we have equal lows here been taken out, right? Equal lows here, right? Been taken out. These points. Watch slowly. I'm going to go very slow now. I know some people are still trying to understand what I'm trying to say. Okay, we have equal lows here. Now, this is right off here. Are you saying this? Okay, this is my point of interest. This is not where I'm trading. I'm just picking the points. I want to see what the market wants to do. I mark up this point, right? Now, I want to see if this market will break above this level for me to confirm a shift in momentum. All right, so the market didn't close above here. If you understand market structure very well, you know when market breaks out of the structure, for it to have a shift in momentum, it has to break above this other one again before you now start looking for buys and all that. Okay, now this market broke down here, has broken below this structure here, right here, support, support, support. Okay, it breaks down, then it goes back up. We have a retest, kind of break and retest, then it goes up again, then the market takes all your profits. Then what happens? Then we have this sharp move. You see this point here. This is my point of interest. Now, see how price closed below this particular point here, right up here. So now I want to see two things. I want to see imbalance and I want to see a mitigation block, right up. Okay, now price closed below this point. The next thing, it's for me to, okay, you see, price close below this point. All right, then we have, you see this sharp move, we have an imbalance, and also here we have an imbalance. You see this sharp move here, we have an imbalance. Market still coming down into this whole zone here. Are you getting me? Okay, now I have my candles all set up. You see the fast move, we have an imbalance right off at this point. Imbalance. This is what I want to see. I want to see this fast move. I want to see another block right here. Okay. Now I want to see a fast move. I want to see another block right here. Okay. Now let's put our line right off. Remember, this is the last buy candle before the sell. The last buy candle before the sell. You either put it at the wick or the body. You have to factor all of this because Most times the market might come to the body, most times it might come to the wick, most times it might come to the 50%. So you have to factor in all these positions in your stop loss. I'm not the market marker, whatever. So you might not know the exact point because most times the market might be affected by some things. So that is why sometimes you don't actually get your entries because the market should have got to a particular place, but it's left for the institutions. If they decide they want to get to the week, they can get to the week. But remember, 10 snipes trades that you're going to get, at least 8 should activate if you know what you're doing. 8 of them should activate, right? So now let's go. We have this fast move here. We have imbalance. We have an imbalance right here. Okay. Now this is for later. The next one we have break of structure here. Then we have a fast move down here, break and a retest in line with this level here. Right, so fast move, imbalance right here. I have a mitigation block right off this point here. So next thing I have to do, I have my sniper set right off, weak body, any of it. You see the entries. These are my entries. Now the last buy candle before the sell. This is the candle. This is the institutional candle that pushes the market to the intended direction. This is their candle right here. Okay, now you can see how precise these stops are. Now, the institutions right off here, pushed it down. You see this one is still open. It's still open. They pushed it down, came back here, pushed it down. Now, broke below this structure again, this other one, down. Now, going back up, this is my snipe point. Once I put my pending order here, my stop loss will just be right above this sell candle right off here. So, imagine entering a trade and your stop loss is just from here, your stop loss is just above that. That's just a 30 pip stop loss. Okay, now the minimum you have in smart money, minimum risk to reward is 1:4. That's the list I've seen. 1:4, that's the list. Okay, so if you are risking 30 pips, so which means you should be expecting at least 120, right? 120 is even more than that. Okay. It's even more. So 120 here. That is 1:4. That's the minimum. So which means if you are risking 1% of your account for this trade, you are making 4% from this trade. Okay? That's the minimum. That's the minimum. 1:4. All right. I shouldn't be trading anything less than that. Okay. Now watch how price. Okay. Now you see this point. You see this point. How the market moved. Follow me. Follow me. We are still moving. We've not started yet. Now we see we have another block here. It's still open. Remember, this market is still moving down. You're expecting this market to go back up at this point.